This is a market review for March 4th, 2025. Today seemed like the reversal day of the week. Today is also the first day that my bias and my model for determining the bias of the day was wrong. Um, but over the past 3 weeks, I've been 100%. So, 1 out of 21, I'll take that. I mean, if I'm able to win 95 plus amount of times, like percentage, that's more than enough. Um, so the reason I think this was the reversal day was because if we look at this big bullish move here and we cut out equilibrium, which is this line over here, we did take out this low, right? So we took that liquidity, but that's the nearest liquidity. Sorry, yeah, that's the nearest liquidity after hitting this equilibrium. And as soon as we hit that, we came off of it. And then based on the time of day and stuff like that that it happened is more telling. So let's see here. Um, I was bullish today, so I was expecting AM session to play bullish. Obviously, it did not, as you can tell. The reason I was bullish was because London was bearish. See, bearish candle here, retrace, bearish, 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 retrace, right? So this is bearish in my opinion. Um, or there's two ways you could see it. You could either see it as bearish or accumulation, right? If we're in this range here. But either way, if we manipulate it down, because there's no bullish manipulation. So playing and continuing bearish was never in my train of thought because, like I said, if this was bearish, if London session was bearish, New York would look to be bullish. And if we had accumulation and a bearish manipulation, we'd be looking for a bullish distribution. Um, So bearishness was not in my mind today, but it happened. No one's ever 100%, right? All we can do is strive to do our best. So, um, this is market open here. I don't remember I think we did play bullish at first for like a little bit. We have this hourly here. We played bullish into that and then came down, took out this low. Here's that equilibrium I was talking about earlier. And then lunch happened, and since AM session was bearish, we were replaying that. And then as you'll be able to see in the lower time frames, there was a point where we retraced a decent amount, a required amount, I'll call it, for AM session, but price wanted more, which in my mind was the switch that said, all right, now we're switching high time frame to bullish. And as you can see, the algorithm kicked back in and we continued to play bullish, took out this high, and then retraced. 15-minute, you can see more clearly either the bearishness, which in my opinion is what happened, or the accumulation and lack of a bullish manipulation. So market opened, first couple minutes spiked up into this 15-minute here, just placed lower, took out this low, accumulated for a bit, and then lunch came in, so we're playing opposite of what AM session did, so we're playing bullish. And this is what I'm talking about. We took out the high of AM session during lunch, which in a normal day, if we're going to continue playing bearish, should never happen, right? The most you should look for is maybe this high right here, the nearest high, or 50%, or equilibrium. Either of which this is not. This is too high, and this is something that just doesn't make sense if you're going to continue bearish. So that happens. We sweep this high, retrace, continue higher, retrace again, algorithm kicks back in, and we seek higher highs, right? That's not the high of the week, is it? No, this is the high of the week. But we took this, and in the last hour of trading, sought out untouched liquidity, which was down here. We didn't get to this one, but definitely down here. Then we came up off of that to end the week. Sorry, to end the day. Again, bearish. I'm not going to go over that, but I'll let you see it. Right? My opinion, we played bearish. So I was looking for New York to play bullish. It did, but just not during AM session. I'll talk more on the 1 minute time frame about why that is, because it'll be best and easiest to see there. But we have this 5 minute here, 5 minute inverse, might also be 1 minute. But price reacts off of it here, validating it once, market opens, bang, here, up, rejected off this and this 15 minute to continue lower, took out this low. Here again is that high time from equilibrium. Reach it, consolidate for a little bit. I don't know if the algorithm stops at lunch, but either way, lunch reversal happens. If we look again, equilibrium, this high here should have been more than enough if we're going to continue bearish. But as you can see, we took that and continued seeking higher prices. So once 130 hits, we should be looking to play bullish, right? Since, in my opinion, lunch reversed the entire move, the high time frame move, lunch should continue that move, and it does. So we take out internal sell side, and then we continue higher, taking out the high of Tuesday. Oh, today. Today is Tuesday. And then the last hour of trading, after taking out all the highs that were left and running at a juice here, last hour of trading was seeking untouched liquidity, which is down here. So, I did take a trade today, and I did lose it. This would be the first trade in maybe 3 weeks that I lost because of, I don't want to say my model was wrong, but because I had the wrong bias, right? There are other trades that I've taken where I've lost because I entered at a stupid time, or I, miscalculated the array or missed the array or whatnot. But like I said, I was bullish. So as you can see, we had a sell side SMT after market open. Then we had a bullish expansion out of that. But you can see that on on NQ, we didn't get much of an expansion. I mean, we had this one, right? And the reason I was okay with reversing after this was because higher time frame, we took out these lows, right? And these lows are prominent enough for me to be okay with reversing after them. So with that in mind, I was looking to enter there. If we pull up ES, well, actually, let's pull up MES because I don't have any charting. I'm just confused. Where did it put me? Where did it put me? Where's my entry? Execution. ¿Dónde está la execution? Here we go. Or not. Okay. Well, ES. Here we go. My first time trading with through the funded, so I wasn't sure if it would show up the executions, and it didn't. So I entered here, right? We had this SMT of these lows. NQ did not break this low. And then we had validation here, and then a closure above it. So I entered at this candle. Looking at this, the reason I entered off ES, it was cleaner price action. it had a little more movement and not just up and down like NQ did. But one thing that should have scared me off is this huge candle up here closed and came all the way off this and then down here. So in my mind, I saw that as a validation. But that's a little too much, in my opinion. A validation should be something like this, right? We tap into it and then we come out of it, right? Or like this, we respect it here, closure, down, boom, respected, closure, up, inverse, something like that. Not a, I'm gonna wick all the way through it and then close in it. That's more of a sign that it's not gonna hold. So I entered here, stop at constant encroachment, obviously got stopped out. And as you can see, it was wrong. High time frame was right. I mean, we did end up playing bullish, but it was wrong. Reason number 2 not to take this trade. Today had no news. There was no 8:30 news. There was no 10 o'clock news. So taking a trade within the opening range without news, especially with how this was looking here, kind of a recipe for disaster and for not, I don't want to say favorable, because favorable just depends on your bias for the day. But I will say, once I saw this up here and then down here, I said, ooh, I don't like that. This is not very clean. So there, I should have, boom, no news, not nice price action, boom. Within the first 15 minutes of market open, if there is no news, you should be able to tell whether or not the markets are in good condition to trade. Today they were not, and I did not realize that because I did not step back and look at it from that viewpoint. But now, because there are some days where no news is still tradable, right? It all depends on how the markets are acting then. But today, as you can see, from 9:30 to 9:45, price is not very clean. It's not respecting things. SMT up top, SMT of the lows, no fair value gaps, no order blocks, nothing like that is being respected. So what does that mean? If I use those arrays to trade and base my entries off of that and they're not working, why would you enter? Right? It doesn't make sense. So all that to say, today my bias was wrong, right? I'll admit that it was wrong. But today should not have been a day that I entered. Should I have looked to trade? Yes. But I should have seen the no news and seen how price was acting and said, you know, I don't want to be in this. And that's just something that you gain with experience. And now I have that experience. So moving on. This is that high time frame equilibrium. This is that high time frame liquidity we hit. We hit it, swept very shallow, and immediately rejected off of it. Now, with the move starting at 10, it's likely to get a reversal or like a start of a bullish move or a reverse move later, right? So if we start to move at 10 during the macro, I would expect lunch, 11:30, to be that reversal. But we hit our target, so in my mind, we're just consolidating, right? At this point, we're consolidating, waiting, spending time. Well, time distortion is exactly what it is. We're just marking time. Once that hits, boom, during the macro, we have this low here, expansion, fair value gap here, respected, that's 1. Well, 2, inverse, but that's 1 in my mind. So macro confirming the low, lunch reversing the bearish move of AM session, 3, confirmation of this fair value gap, 4, enter off this. So in my opinion, this is the trade of the day, right? Oops, stop at equilibrium, targeting highs. This should be profit 1, and then you could do profit 2, profit 3, profit 4, but I wouldn't have gone higher than this. All right, so that's what we're looking at for a trade of the day. Supported by fair value gaps. Macro here causes a tiny retrace. Finish that retrace, come up, take out this high, retrace down here. It's equilibrium of this move right there. Perfect. Again, during the macro, the low of the retrace, SMT of these lows. This is an A plus setup. If the timing was better, right? Because at this point we took out this high, swept it, and then immediately fell off of it. We could very well go bearish if we're seek and destroy. So the reason why this is not trade of the day is because this one in my mind is safer. So we have the macro, right? Reversal here, SMT of these lows. If we are sure that it will reverse, or sorry, if we are sure that it will continue this bullish move, great trade to enter. All right, we're in at the low of this, we're out at this liquidity. Perfect. Stop below here. Maybe constant encroachment if you're cautious. Lunch ends, algorithm kicks back in, we take out sell side liquidity, internal sell side, so somewhere within here, fair value gap, whatnot. Hit that expansion, fair value gap, expansion, inverse here, validated, bang, right? Here, up, hits this inverse, again, low of the macro. This is a loaded gun. We could retrace here. We could. Why don't we? Well, because we just started lunch. We don't want to hit this and then retrace. We're never going to, think of it this way. If a spaceship had to come down right as it's leaving the atmosphere, it's not going to be able to leave the atmosphere. We need a little ooh, right? We need a little juice. So here, breakaway, balanced. Another expansion. Look at these wicks. This is fully balanced. Inverse, reacted here. Macro, low of this point, comes up. Fair value up here. Expansion, higher, 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 taking out this high. Climb higher. In my opinion, we're just climbing, climbing, climbing. This is something you could be in, but price like this that isn't really trending, that's just climbing, I don't really want to be in. As you can see, the macro doesn't really do anything because of that. Last hour of trading in the 315 to 345 macro. It's this high. There is no high to hit here. So maybe it's like a high of an hourly fair value gap. Last hour of trading seeks untouched liquidity, also known as, in this situation, sell side. Come down below this low, this low, this low, this low, and we don't get to this one. But that was trade of the evening. Higher time frame. After this, I am looking bullish, right? Looking at this to be a reclaimed bullish, which it looks like it has. Looking to definitely take out these highs. These might be a little bit of a stretch. Wednesday tends to be a very expansionary day. Today on the daily time frame was relatively small, which means tomorrow could be a heavy expansion. Yeah, I'm looking bullish based off of hitting this high time frame equilibrium, sweeping this low and then rejecting, lunch reversing above AM sessions high, and power of 3 for the week. So, but all this depends on London, right? If London tells us to play bearish, we're playing bearish. Because even though it didn't work today, it has worked for me flawlessly for the past 3 weeks to a month, just to my recollection, right? So I'm not gonna change anything. I'm not gonna do anything like that with the model. Just happens sometimes. So yeah, this has been a market review for March 4th, 2025.